Michelle, she says she's going to be independent, but clearly this was on the minds of the senators. Is that a question that you guys have?
Yeah, look, it should be on the minds of senators. If you see what she has said in the past, she's on record suggesting that maybe there should be a little bit greater relationship between the Fed and Washington. She's also questioned whether or not, and actually advocated at times for the gold standard. So in the past, a lot of what she had said on record is questionable and unconventional when it comes to monetary policy in the Federal Reserve. And I think that's what the testimony showed today.
If she gets in, though, does it alter the course of Fed policy or Fed thinking in any way that's meaningful for the economy and for investors?
Look, she'd be a governor, and she'd be influential in that regard as being a governor. But no, at the end of the day, it would be just one more voice. And ultimately, it's the chair that is setting the framework and setting the voice for policy. I think the concern, and where probably market participants are focused, is that not if she gets in as a governor, but what's her next step? We know that Fed Chair Powell's term is up. Would she then, if President Trump is reelected, have potential to become chair? And then it becomes much more transformative.
So, I mean, for now, though, David, the president has made it clear he wants easier policy, interest rate cuts. The market appears to be making it clear it wants easier policy rate cuts. Are we actually going to see that?
Well, I think that we're probably going to see that irrespective of who ends up filling that vacant governorship role. I think the Fed has already told you that their biggest concern actually is this ongoing shortfall of their measure of core inflation, which is the core PC deflator, against their target. And my sense is that the economy is going to be cooling off for the remainder of the year. So, yeah, I think that the Fed will be cutting interest rates. The question is really timing and the extent. And this whole notion, by the way, that, about the Fed's independence is a bit humorous, because the Fed is actually the creation of Congress, the Federal Reserve Act. And so it's a bit strange to think that the Fed is completely independent. So this whole debate is actually, I think, a rather moot point. I think the biggest, the most controversial Fed chairman of all time was Alan Greenspan. When you think about it, when he got appointed in 1987, he was a big gold bug, and then after he became chairman, he never looked at gold again. And there's other examples as well. So I think, as Michelle said, it's really what you do once you become a member of the team, as opposed to your previous views.
So you said a number of things there, but one of them you said is that the economy looks like it's cooling off. What are you seeing that other people are not seeing? Because the expectation now is 2% growth, still low unemployment, and we've continued to see better data, mostly out of the U.S.
Well, the answer to the question is this. We just came off a year where corporate profits were negative for 4 quarters in a row. So people build this view that because the stock market total return was plus 30%, that the economy must be doing great. No, the economy is actually not doing great. And the 2 biggest contributors to growth in the 4th quarter was declining import demand, funny enough how that works, and government spending. You have to ask yourself the question. We have a government deficit of almost 5% of GDP, and we have government spending up 10% year over year. So, yeah, it's going to be very difficult with that amount of government support. As we talk about the return of socialism in the United States, the government support for the economy is incredible. But I would say that actually outside of the consumer sector, you look at commercial construction, you take a look at multifamily, and commercial construction is pretty soft right now. Sorry?
Outside the consumer sector, that's the biggest part of the economy.
Hey, David.
I understand that, but there'll be lags. But we have a 3-quarter capital spending recession in the United States. The question for this year will be whether that morphs into an erosion in consumer spending. To me, that's the really big issue more than anything else.
David, last year was all about multiple expansion, so I kind of agree with you that we didn't have the earnings growth at all. This year, though, I kind of think that we're set up for better earnings. It sounds like, to me, from your comments, you expect continued negative earnings in 2020. Is that right?
I'm not so sure we're going to have negative earnings. I just don't think that we're going to have the, call it 8 to 10% that's priced in. You mentioned earlier about whether we should be debating if we're going to have a recession or not. I mean, that's a debate we probably should have had in the 4th quarter of 2018 when the market was down 20%. I mean, the market is really priced for an earnings boom. I mean, we have on a reported basis, the multiple is getting up towards 25, unreported, not operating, reported, actual GAAP earnings. So the market's price, I don't even have to have a recession view to have a very cautious view in the stock market, except if the Fed cuts interest rates, provides ongoing liquidity, and we get this ongoing share buyback boom, which has been the principal source of demand for the stock market. I think even for, quotes, bears like me, we'd have to rein that in, because there's other things going on in the stock market right now that have nothing to do with the broad economy.
Michelle, take the other side. You guys are not nearly negative like this on the economy.
So by all means, with all due respect to David, and I think he raises important points about risks. I would say as our baseline forecast, we think the economy actually is set to accelerate a bit into the second half of the year. So Q1, I think, is tracking weak. We're looking for only 1% GDP growth. And a lot of that has to do with the continued uncertainty from 2019 weighing on business investment. There's a whole lot of lags there. You have the Boeing hit, which is a factor. You have this reversal around imports that David talked about. But if you look at the fundamentals in the economy, it's hard to tell a negative story right now. You have job growth that accelerated, jobless claims that continue to come in at low levels. Consumer confidence has held in. We'll see what retail sales show tomorrow. That's going to be critical. As you mentioned, the consumers are a really big part of the story. And I think the consumer probably will show up tomorrow, and we will see further spending. So to me, it's not a gangbusters economy. We're not going to see a considerable acceleration. But I do think that we should see the economy grow.
What if China prints zero on GDP this quarter? I mean, the economy is stopped.
Yeah, sure.
What if that spills over into Europe, which is more vulnerable, right? And already tracking very low growth, to Japan, which also has some economic problems.
Yeah.
How vulnerable is the U.S.?
So look, I mean, the economy, the global economy is linked, and we've seen that time and again in this cycle. We saw it in 2019, right, in terms of the trade shock, and we had weakening in China, considerable weakening in Europe, and we saw that through financial conditions. We saw that through terms of trade. So part of the optimism that people have had so far this year has been green shoots that are developing largely in the global economy, particularly in parts of Asia. So that is a big part of it. Manufacturing to rebound will be a function of global growth improving. So if China ends up being considerably weaker, then of course that will bleed into the U.S. and that recovery will take a bit longer. But just based off of the domestic economy, the fundamentals in the U.S. economy, they look pretty favorable in my view.